You're watching us here back on Chartbusters on CNBC TV18 in our special Diwali studio. And the stock on our radar right now is Senco Gold. Now, if you just take a look at the way the stock is moving right now, it's some profit taking, it's in the red. But if you compare that with the kind of move that we've seen in just the last 3 months, it's up almost 70%. So maybe some profits taken off the table after a decent set that the company reported in the second quarter, 26% revenue growth, 22% EBITDA growth as well. We do have with us Suvankar Sen, who's the CEO of the company. Along with that, we also have Sanjay Banka, who's the CFO of the company as well. Mr. Sen, Mr. Banka, thank you so much for joining in. First up, wish you, your families, your entire team a very happy Dhanteras and Diwali greetings as well. But let's talk about business then. Mr. Sen, you know, the first half typically is weaker for gold business or jewelry business. It's the second half where, you know, you see the weddings, you see festivities and all of that coming by. The first half of this year itself, you've done 28% revenue growth as against your historical CAGR of 20%. Second half, presumably stronger. What can you end this year with in terms of growth? Are we gunning for closer to 30%?
So, I would be, what the guidance that I would like to give to the market is that, in the last 3 years, 5 years, we've been having an 18 to 20% growth year on year. And, the first half have been very good. Even the second quarter, in spite of it being the Adhik Maas and not too many weddings there, and the festivities are about to start in the quarter 3, I will continue to say that, yes, we will aim for higher, but 18 to 20% growth year on year, just like the way we've been doing in the past 3 years and 5 years, we will continue to guide in the similar manner.
Okay, all right. Hi, gentlemen. Good morning, and wishing you, your family, as well as your entire team, happy Diwali, happy Dhanteras as well. Give us a few more details. Give us a split between your gold diamond sales ratio, and where is that number headed? Say by the end of this fiscal, that's FY24, and then by 25, where does that number move to?
So what is very critical here to understand is that, we've seen a 34% growth in terms of our diamond jewelry sales, in terms of volume, and in terms of value, we've seen almost a 50% growth. So what you can see and what you're seeing in the trend, and we are in today's Dhanteras, so a happy Dhanteras to all of you and all the viewers, is, there have been two kinds of customers in the market. One is the wedding customers. We are seeing that in quarter 3, there are reports by CAIT that there are 35 lakh weddings that are in the radar. So that's like almost a 4.5 lakh crore of industry, in which 10 to 15% is the share that jewelry usually takes in. And along with that, we are seeing that the everyday wear, the daily wear, people are preferring diamond jewelry over gold jewelry. So the share of diamond jewelry for Senco has gone up from last year. If we've seen at around 9 to 10%, it's moved up towards 12%. So year on year, we are seeing a higher growth in diamond jewelry compared to gold jewelry.
All right. So what does that then do to your margins? Because higher diamond jewelry would make one believe that your margins are likely to improve. The second quarter, your margins have actually come down to around 3.5%. And even if you compare it to your peers, you are at the lower end of the spectrum. So with increasing diamond sales and the growth that you're gunning for, can we see your margins move towards high single digits and low double digits? What are you targeting by the end of this year and the next?
See, the gross margins are at a middle to high double digits in terms of, in the range between 15 to 18%. That's what we see overall in the year. But in the quarter 2, being no festivities, and you're investing for the festivities, the Adhik Mahina being there. So therefore, we have to continue doing business. And in terms of growth, there have been a lot of schemes and offers. The gold prices have been volatile. So we've been there to acquire new customers. So growth has been the focus area. In quarter 3, we will continue to see a higher growth, and that will add on. And we have seen it historically as well, that quarter 3 is where most of the bottom line becomes stronger, and you see a large chunk of your overall gross margins and PAT getting added in the quarter 3 season.
All right, Mr. Banka, let's get you into this conversation then. What's the gold hedging strategy?
Yeah. So gold hedging strategy continues to be very pragmatic, and we have maintained our hedging in the same level of 80% plus. So the hedging strategy helps us to de-risk any. So if you see, the gold prices have been range bound in quarter 1 and quarter 2 versus quarter 4 last year, while the prices came reduced in June and September. But it did not impact our financial too much because we are properly and adequately hedged. So your question on the margin. So while our MD talked about the gross margin, EBITDA margin, if you look at it, was around 7.8% last year. So while in the quarter one and quarter one was around 5.4% and quarter two is 3.5%. But this has been the trend in our company and generally in the industry, that Q1 and Q2 the gross margin as well as the EBITDA margin will be tepid and muted. The main impact come in when the Dhanteras sale happens in Q3 and Q4. So we are quite hopeful and confident that we will be in the same range of our EBITDA margin which was last year. So Q1 and Q2 is not indicative of the full year trend.
All right, so 7.8% was what you reported last year. You believe that this is what you will do towards the end of this fiscal as well, given the sales that you will expect in the second half. Final question then, Mr. Banka, you said that Dhanteras accounts for a large chunk of sales. How has the day been so far according to you? What do you expect this Dhanteras to do versus the last one? And also, you are concentrated in the western part of the country, West Bengal mainly. Their festive season starts early with Pujo, etc. as well. So what are you anticipating in terms of growth in the third quarter?
So lastly, we have said that our CAGR has been 20%, while in quarter one we grew by 29%, quarter two by 26%. So very clearly, even on a more conservative basis, we feel that a minimum growth of 20% will be there. So last year Q3, we had a turnover of around 1345 crore Q3. So we feel that 18 to 20% growth will definitely come in Q3, and as we have talked about a 20% CAGR growth. So overall for the whole year it will be 18 to 20% CAGR growth.
All right, gentlemen, appreciate you all joining in. Wishing you all a good festival season as well ahead, and wishing you all the best in terms of business. Next time you join in, we'll try to take an update in terms of the numbers that you've given us. For the time being, though, we'll have to slip into a short break. We come back, we'll get you more focus on the markets. Don't go anywhere.
बंद करो कान